Welcome everyone to this special video on a new feature which we have introduced along with Opstra. It is a part of Opstra as well as outside Opstra, whichever way you look at it. If viewers will recall, we had recorded a video more than 6 months back, Raghunath and me, on this feature called Optest, which is nothing but a backtesting of options all the way from 2019. And the backtest feature which we have in Opstra is only for EOD basis, whereas this feature allows much more things even on an intraday basis. So I have Raghunath with me who will explain all the features in one go, and then we will take one feature at a time and explain all the features one by one. So welcome, Raghunath.
Yeah, hi Happy. So as you said, we have done some 6 months ago a video recording of Optest. So that was in beta phase where the features were not fully developed. So we are just still in testing phase. Now this is a much more mature version of that. So this will be the alpha version, we can say. So
and like we always do, we also have incorporated some suggestions which users have given us. A lot of people have used that old in the sense last 6 months they have used Optest and they have given us suggestions. So those also have been incorporated along with whatever new things we wanted.
Yes, we have taken the suggestions and we have deployed them in the backtesting so that you also have some more new features than you have seen 6 months ago. How this backtesting is different from the backtesting that you see on Opstra. On Opstra, the backtesting is on EOD based, but here it is on 1 minute data. So you'll have intraday backtesting system. For the indices, it is 1 minute data, and for stocks, it is 5 minute data. The reason being, in stocks, the liquidity is not that good compared to indices. So if you calculate, implied volatilities and other things, you will not get very good sampling of data in the case of stocks. So that is the reason we have given 5 minutes of data instead of 1 minute data. But speaking in terms of trading, you will not see huge difference in the case of stocks using 5 minute data. But you might see that huge difference if you use 5 minute data instead of 1 minute data in the case of indices. So that's one distinction I want to make, that why we are using 5 minute data in the stocks and why we are using 1 minute data in the case of indices.
And if you can mention since when we have this backtest, the date from when?
Yes. So we have this data from 2019, beginning of 2019. So we have almost more than 5 years of data. So, and this will keep on, we'll keep on adding the data as in we receive more data. So this is the homepage, and here we have described different features that are available on the Optest. Now you can find Optest both on defineedge.com as well as defineedgesecurities.com. So it's exactly same in both. So there are some pricing differences which we will talk about later. And then so here we have intraday and positional backtesting, and even in positional backtesting, the data is used still 1 minute data. Okay, intraday data, obviously it will be 1 minute data. In the custom backtesting, we have given users much more control in terms of backtesting. Like, you can control the entry and exit of a leg, of an option leg at each individual leg. So that is why we are calling custom backtesting. And then we have much more elaborate backtest summary. Okay, all the useful information that is required for a trader to make a decision whether to use this whatever you have backtested results in your trading system or not. Okay, and then we have a calendar view, so you can look at yearly, monthly, and daily. Okay, so we have broken down the results at yearly level, at monthly level, and daily level.
So let's say if I select from 1st January 2020 and give a fixed strategy to be backtested, For the last 4.5 years, for every month, what was the return or loss, it will show me on a monthly basis.
Yes. Anyways, I'll show all those features.
Yeah.
And then there are different leg selection parameters depending on your, at stop loss level, target price level, and whether you want to select a strike based on delta or points or percentage premium and so many other things. And each and every trade, we have given so much details on that. Like you can look at the chart, individual leg chart, and then you can have a simulation on the data, and you have the combined strategy price, how it has performed. So you have much more in-depth data for each and every trade that is there in the backtest result. And then we have a drawdown chart on the overall results of the backtest. So just to understand that, how much risk you might be taking if you have to follow any particular backtest, right? So that will give that is given in this drawdown chart. And then, as I said, we have detailed price chart and intraday table. Intraday table means what has happened for the trade at each and every minute, both in chart form as well as in the table format. So you will see P&L returns and everything. I will talk more in detail. And option simulator. So let's say you did some kind of backtest on short straddle, for example, or some iron condor. Now you got a result, and there is one particular trade in those backtest results, and you want to simulate. You want to see the simulation of that trade. That you can do in the option simulator in the Optest itself. And then in position chart, you can see the data at individual leg level. So let's say you have done iron condor. So there are 4 legs. So you can see the 4 legs, the data of each and every option leg, as well as combined price and how those have performed individually with respect to the underlying price. So in this case, it will be the futures price. So these are the main features that are there. And let's go also have a look at the tool itself, backtesting tool, and I'll explain those features, a little bit in more depth. So we'll go to.
Let me ask you one question to start with.
Yeah.
You also said there is an option simulator. So the old option simulator in Optra and this, is there any difference?
There is no difference. It's pretty much
basically
similar.
There is a difference in the backtest feature in Optra, the current one, and this, because that is EOD, this is intraday, but the simulator is the same.
Yeah, simulator is the same because it still uses intraday data. Only thing is that we already pre-simulated it for you. So all you have to do is that you just click next, and then it will show you the simulation.
Yeah.
Okay. So now we have 3 different categories in the backtesting system. One is intraday, which is 1 minute data. So in intraday, if you are selecting intraday and you do a backtesting, that will enter and exit on that day only. Okay, it will not go to the next day. So that's why we are calling it as intraday. So it will be restricted to only one particular day. Okay, so you are backtesting any particular strategy each day separately. Okay, so entry and exit will be on the same day. So that is the intraday. Now coming to positional can be, it can run for much more longer depending on the parameters, entry and exit parameters that you select. So it could be, it could be from 45 days to, even 2-3 days also. So depending on which kind of backtesting method you use, this can vary. Okay, but the thing is here is that in positional, the entry and exit can be on different days. Okay.
So in a sense, just to ask you here, in a sense, if let's say, there are lots of hundreds of strategies which people do. If let's say someone has a strategy of entering a trade, let's say a strangle on a Friday at 3 p.m. and exit on Monday at 9:30 a.m., that is possible to backtest, right?
Yes, that is possible. I'll show you how that is possible.
Okay.
But yes, that is possible. Yeah. So now that is positional. Okay. This is bird's eye view, and the final one is the custom one, which you are seeing here. The custom, as I said earlier, that you will have the control at each and every leg, both in terms of entry as well as exit. Okay. And there also you can do intra as well as positional. All right.
Can you explain this custom part more? This custom so that it is clear.
Yeah. So, for example, all right. So here I want to do a short straddle strategy. Okay. Then you tell us what is a backtest begin date, end date, and period and so forth. Now you can add each and every leg. So here you have leg selection parameters. So how you want to select your leg? Okay, you can use based on delta, or you can use based on points. Okay, so 100 points down or 100 points above, like that, or in terms of percentage. Okay.
Okay.
And then in terms of premium also, like let's say 30 rupees premium or 40 rupees premium, and so on and so forth, like that. All right. So that will be the custom backtesting. Sorry, this is will be only intraday. Sorry, yeah. This will be only intraday. So let's come back to intraday, and then I'll explain everything in more detail. Okay.
Yeah.
Feature by feature. Okay. So in intraday, as I said, the entry and exit will be on the same day. Now there are several backtesting methods in intraday, and there will also be same case in the case of positional and custom. So what are the different backtesting methods? So we have non-directional in the sense like straddle, strangle, iron condor, iron fly, those kind of strategies. And then we have directional strategies like long call, long put, short call, short put, and then spreads, and then ratio spreads. Strategies look like those, which are directional in nature. And then we have VWAP technical trading. So in this case, we will use VWAP for entry and exits. Okay.
Okay.
Then we have P&F technical trading. P&F is a different kind of charting method. Just like a candlestick chart, there is a P&F chart, which is a different kind of charting method. So there also we use different kind of technical indicators for entry and exit. And then similarly, we have Renko technical trading. Here also Renko is another kind of charting method. Okay, and then we have adjustment-based strategies. Adjustment-based strategies is that like you enter a strategy, but we will tell to the backtesting engine that you make an adjustment if it breaches certain kind of parameter. Let's say it could be positional delta, or it could be number of points the underlying has moved, or it could be the percentage the underlying has moved, or it could be based on stop loss that might have triggered on your position. So there are different kind of adjustments based on which we can make an adjustment. Okay. Obviously, I'll talk about in detail what all are those. So on different backtesting methods I have shown you, and then we have different strategies also in that. Okay. We have, if you select non-directional, it will show only non-directional strategies. Okay. And you have obviously different tickers. And for intraday, we have chosen only, for now, we have chosen only the indices for now, because we see that traders use mostly indices for intraday trading, and barely anybody uses stocks for intraday trading, as far as I know. Okay. So we have restricted in that sense to only Nifty, Bank Nifty, and Fin Nifty for now, and we'll add as we get more data in mid-cap Nifty and Sensex and also Bankex in the future. So we'll add those as well in this, because Sensex is like very recent, so we don't have much data to backtest on. Now here you have also specificity of mentioning when you want to begin the backtest date. So you can choose a specific date also. And similarly, you can also choose specific backtest end date. Okay, so you have a calendar kind of system where you can go back and forth in terms of year, in terms of month, and in terms of year also. You can choose whatever you want to choose. Now you can also choose a period. Okay, so by default it is 6 months. You can also choose 1 year. Automatically it will go back 1 year. So by default the backtest end date will be the previous monthly expiry. So in this case, the last July month. So it will go 1 year back if you select 1 year, and 2 years if you select 2 years back. And if you select something else, it will automatically becomes custom. So you see, this becomes a custom period.
Okay, one question.
Yeah.
You have selected weeklies, but when you select 1 year or whatever, I mean, the end date is coming to July 2024. Why isn't it coming to last week's expiry? Today is 19th August. That's why.
Yeah, we can also choose weekly also, but this is in general for stocks and indices combined. We have chosen that, but you can choose weekly also, not an issue. You simply go to backend test date and choose till whatever expiries are done so far. So let's say till last Thursday it is done. So you can choose that expiry, and then obviously.
So my next question is, when is the data, once an expiry is over, when is the data uploaded?
Yeah, so let's say weekly is done. By next day that data is available already.
So let's say by after Friday closing, you can test for the weekly expiry of that Thursday.
Yes. Even you will get by early morning Friday itself.
Okay.
Yeah. So that is available immediately. Okay. And now in the intraday, we also provided entry time. So here you can choose at what time point you want to enter a particular trade. Okay. Now let's say in case of non-directional, your entry is only time-based. We call this as time-based strategies or time-based straddle or strangle, time-based strategies, right? So you can choose the time at which time point you want to enter a particular strategy. So it could be 9:20, 9:30, 10 o'clock. It's totally up to you. And then what is the exit time? 3 o'clock, 3:20, 3:10. It's totally up to you. You can simply click and choose at which. So it will be a 5-minute interval. So you can choose that within that 5-minute interval, which time point you want to select. And then here you have hours selection. So you can also select the hourly, whichever you want to exit or enter. Okay. Now it is all days. So let's say somebody wants to test a strategy on all days. Okay, not just on one particular day, but all days. Then it's by default we select all days. So we are entering this particular strategy each and every day when there is when the market is open. But let's say if somebody wants to do a particular strategy only on Thursday, the expiry, in the case of Nifty, or in case of Bank Nifty, some other day. So that you can do. Okay, Wednesday, for example. So you can select that particular day also if you want to do.
It can be multiple days also, Wednesday and Thursday.
Yes.
Okay.
It's totally customizable.
Okay.
So by default it is all days. Now let's say I want to choose a short strategy because it's the most common time-based strategy people use. So let's say I want to choose short straddle. Now here there are different strike selection methods. Okay. Now you're selecting based on delta, okay, or based on points, or based on percent as a premium. Okay. So now let's say I want to select based on delta. So at the money strike is at 50 delta, right? So that will be 50 delta. So it's all automatically show you 50 delta as common. And but you will also have the choice to select other delta with a step of 5 delta. Okay. So you can select out of the money as well as in the money up to 60 delta. Yes, most people don't do in the money straddles. Mostly they do at the money or slightly out of the money. And then let's say I want to choose based on points. So it is 0 point, means you select exactly close to the at the money at that point of time, whatever future price is. Okay. Or you can say 50 points down, 50 points up, 50 points down for put, 50 points up for 50 points down for both put and call, because straddle is have to be the same strike price.
Yes.
So that way you can choose both on upside or downside. So we have a step size of 50, okay, and then percentage. So you want to choose 50, 0.25% down of at the money price from the future price, 0.25% down or 0.25% up. So either way you can select whichever strike you want to do.
How does this percent work? Can you elaborate this percent?
Yeah, percent is very simple. Like let's say Nifty is at 20,000. Okay, so I want to choose 0.25% down.
Okay, so it will be percent of the underlying.
Yes, underlying.
Okay.
So 1% down means 1% of 20,000. Accordingly, that much down it will be 200 points down, like that. And the premium is based on how much premium you want to choose. So let's say somebody wants to enter a straddle only when there is certain premium available. Let's say he wants 300 rupees premium, then only he wants to enter. So it will select that much premium for each strike. Okay, 30, 30, like that. Or 100, 100, so 200 combined. Okay, so like that, it will select based on the premium how much premium you want for your strategy. So let's select the default method is a delta method, which is the at the money strike price. Now coming to stop loss and other parameters. Now stop loss and target price. TP means target price and stop loss means SL means stop loss. So in the stop loss, we have also a trailing stop loss method. Trailing stop loss, you already know, like if you are in profit, your stop loss is also moved up according to your if the profit has moved up. So it is trailing accordingly. And then again here you have different criteria, percentage, points, and even percentage of capital deployed. So let's say you have deployed 50,000 and you don't want to lose beyond certain point of that capital. So you use as a percentage of capital, and whenever that is hit, the trade is exited.
Yeah.
So you have multiple selection methods. Percentage here means percentage of premium that you have. So let's say you have 300 rupees premium. So let's say 10% of that will be 30 rupees, right? So 30% means 90 rupees. So if you enter a short straddle and your stop loss is 30%, so 300 and so 90 points above 300 will be your stop loss. So it will be 390 will be the stop loss.
Yeah.
And same target as also is the same. 30-30 is by default. You can change however you want. So we'll change it to, let's say, 0. And here you can also change the number of quantity you want to use. So remember, in the case of intraday trading, the returns that you get are very minimal in terms of percentage, you will not get more than 1% or something like that. In some cases, you will not even get 0.1, 0.2% also. So these things will work. These intraday things will work only if you do large quantity, right? That's why people do 10 lots, 20 lots, 30 lots, 40 lots, because the premium is so little on an intraday basis. So that's why we have also given lot quantity if you want to do, because so let's say if you do this with one quantity and you get very good returns, but your brokerage will be very high if you do it only with one lot quantity, because your brokerage is based on per order basis. So for one quantity or 10 quantity, the price is same in terms of brokerage. So that also will kind of covers if you use multiple quantity in the case of intraday trades. I mean, this is what most people do. I'm just reflecting that in here. Okay. So I'll just show an example of that also. Let's choose single lot quantity here. Now here we have something called as IV percentile. Now remember, each and everywhere we also shown these tooltips here. Okay, tooltips, it will give information what each and everything in that drop down means. Okay, what these all different thing means. Okay, all you have to do is that you simply hover here and it will show the information that is required for you to choose the parameter. Okay, so it's everywhere. Okay, so you don't get any confusion regarding what each parameter means. Yeah, so we are at IV percentile here. Now IV percentile, so what it means is that it will just tells you how rich the premiums are, right? So your IV percentage is 100 means premiums are very rich in compared to last 1 year data. And if IV percentile is very low, like 0 means it is like the least, the premiums are the lowest in the last 1 year. So if you look at the data in the last 1 year, it is we know that the premiums are very less in the case of indices, right? The IV went up to 10, but the VIX went up to 10. So the premiums are very less. And when you do this kind of non-directional short straddle strategies, the premiums are very low. Your strategies are at very high risk of going into loss. So if you're somebody, you are very cautious of when you want to enter your strategy, that you want to have certain good premiums, only then you want to enter your strategy, then you can choose this IV percentile method. So let's say I want to choose if the IV percentile is above 50 or it's around 60 or if it is about 70, like when the IVs are very high and your premiums are very high. Okay, that way you have better probability of good results. Okay, so for now let's keep it 0 and I'll show the effect of that also later. I'll select the slippage is nothing but when you enter a trade, right, there is difference between bid and ask price, right? So we are saying that how much that percentage difference is there depending on the index or depending on the stock that you are going to backtest it on. Okay, so that might vary from index to stock and also from stock to stock also. So you have to change this according to what is the difference between the bid and ask price. Okay, so you can, by default it is 0.2, you can change it to 0.3, 0.4, 0.5 up to 2, I think 2.5. So by default we kept it at 0.2 so that we have some real world appreciation of what happens in these backtest results. Now margin capital deployed is a custom field where you can enter how much you are going to deploy your capital. So by default, the margin that it is showing here is based on the current margin required for that particular strategy, based on current day. So current day you require 80,000 rupees for a short straddle in Nifty. Okay, so this maybe for older data you might have to use slightly higher, maybe 120,000, like that, 1.2 lakh.
Yeah, actually, one thing, Raghunath, how does it work? Because the Nifty lot size has changed from 50 to 25, because of which the margin has changed.
Yes. So
How
that's
does
what
it
I'm
work?
saying.
Yeah.
So we have to go with a fixed capital deployed in the beginning itself. That I am going to enter with this much capital. Now, ideally in a backtesting system, always you should have maybe 1.5x of your margin required, so that if you begin in the beginning, if you go into loss, you still have that margin required to compensate, so that your trade will continue. Okay. So maybe you can choose like 1.5 lakh, something like that.
No, my question was, if I select one lot of Nifty today, which is 25 lot size, and I backtest for the last 3 years. So at the time when the lot size was 50, it will still take 25, or it will take 50 for that time?
So this is at currently by default that we are showing is based on current 25 lot size.
Okay.
Yes. So that is the reason I'm saying that you have to change it accordingly, so that you have a realistic understanding how much capital is required. We're only showing an indication of how much margin is required currently. So make it 1.5x or 2x, accordingly. So let's make it 2x here. So by default you require 80,000 with 25 lot size in Nifty, right? For a short straddle. So now let's make it 1.6 lakh.
Yeah.
Okay. So you can change it. It's not an issue. It's totally in your hands. It's totally customizable. Now, what about brokerage per trade? Now, brokerage per trade is for you to enter and exit. So this is inclusive of STT, tax, and everything, brokerage and everything. So for an entering and exiting, they're taking an average of 60 rupees based on most brokerages. So this also, it is customizable. You can enter as per what you are paying to your brokerage. Okay. So this is the default one that most brokerages charge, or full-time
So this includes brokerage plus other charges also, which you can change as per your wish.
as per what you observe in your trading, or with your brokerage. So it is totally customizable, no issue. So okay, so let's backtest now. So the parameters are very simple: non-directional method, short straddle, Nifty ticker, 2 years of backtesting. So we are only showing with 2 years. Months, this is totally online. You will have lost 5 years of data. And expiry type, are you going to choose monthlies or weeklies? You can choose any one of them. Obviously, for indices, most people will use for intraday weeklies. Okay. And this is the entry time and exit time, all days. And these are different selection parameters. Stop loss of 30, target, let's say we'll keep it 0. Okay, with one lot.
What does 0 mean? It is the premium, or what is it? It is percent.
This one.
Yeah.
You in target. So target 0 means you're not having any target price.
Okay, so whatever the system gives.
Yeah, I mean, there is no limit to how much.
Basically, if the stop loss is not hit, whatever will be the premium at 3:20 p.m., that will be the target.
Yes. If it is, yes, exactly. So if 30% loss is not met, it will exit at 320.
Correct.
Oh. So we'll start the backtesting now. So depending on how much period you select, and
2 years, that is about 450 trading days. It is backtesting now.
Yeah, kind of. So 250, 250, yes. Actually,
200, 250 each, so twice. 400 to
500 days, let's say, roughly around 500. So it has to go with
the straddle every day for the last 450 to 500 days right now.
Yes, 450 to 500 days. So depending on how many parameters you select, and it might take a little bit time here and there. but you'll get the data quite quickly. And again, as a disclaimer, whatever backtest that you are doing, it only provides you insights. Okay, it is not a guarantee or indicator that this will be replicated in future also, because it all depends on market conditions. What worked
maybe something
may not
that has worked in 2022 might not work in 2024 or 2025.
Exactly. So you have to keep updating yourself. You have to keep backtesting quite frequently as market changes its behavior. Okay.
Yeah, I think it is done in less than a minute, I think.
Yeah, it will be quick only, not a problem.
Yeah.
Correct. So this is a very good summary. We have 5 into 4, 20 different, 23 different data points that we show here. Okay. So here we're saying the capital employed is 1.6 lakh. Total number of trades 491, close to 500. Yeah. The number of profitable trades, the number of lost trades, and the brokerage. As I said, it will be a huge brokerage. So every day, so for a straddle, 60, 120 rupees, and then you calculate. That's a huge brokerage, right? And then the number of maximum consecutive wins, the number of maximum consecutive losses. It will just tell that how much, consecutively you might win or you might lose, so that you have an expectation of this strategy. Okay, somebody might start this kind of strategy based on these results, one day, and suddenly if there are 5 consecutive losses, you might lose faith that this is a loss-making strategy. But you have to see historically what has happened, right? Because it might be a coincidence that you are starting at at such a time that you are immediately hitting those continuous maximum consecutive losses. So that this information will be useful in that case to understand how this system is behaving in terms of backtesting results. So expectancy, it tells you whether this strategy will work in the long term or not. So if it is positive, means positive and higher, then it means that this strategy will work positively and will give good returns in the long term. Profit factor is nothing but the profit divided by the loss, gross profit and loss. And what is the average PNL for each day, how much you are getting? So 71 rupees on an average you are getting. Obviously considering both wins as well as losses. Now gross gains, what are the total gains in the profitable trades? What was the average gain? 1200 rupees. What is the gross losses? On total, how much losses were there in the loss-making strategies? And what is the average loss in those loss-making trades? 1500. Now, what is the win rate, right? So, if we have 284 divided by total number of trades, that will give you the win rate, win-loss ratio. 284 divided by 207, that will give you the win-loss ratio. Maximum profit in a trade. So, how much maximum profit you can expect? 9,500 rupees. Maximum loss in a trade, it's up to 6,000, provided you have a stop loss of 30%. Maximum drawdown. So let's look at a chart here. Now the maximum drawdown happened here, somewhere here. Okay, 13% here. So after reaching a certain peak, so how much you can expect your equity curve to suffer? Okay, so based on this data so far in last 2 years is around 13%. Okay, so here you can see the chart of your maximum drawdown and equity curve. So we have started with let's say 1.6 lakh or 0 rupee of profit, and we ended up with 35,000 rupees. Okay. Now total number of exits by target hits. We didn't choose any target hits, so it will be 0. Yeah. So how many stop losses have been hit? 116 stop losses have been hit in the case of loss-making trades. Okay. So the remaining of these loss trades are simply exiting at 320. Now total returns is 22%. 22% based on what?
Just one
On
thing,
the capital employed. Yeah.
Raghunath, 116 stop losses were hit doesn't mean that the other trade was in profit. There might be a case where there are lots of trades which were not hit stop loss but still not in
Yes.
loss, and they were exited
Yes.
at 3:20 p.m. in loss.
Yes. Yes. Yeah, which includes, whatever remaining of this and this. But in the case of only loss trades, the remaining, whatever left after we remove this from this, are those ones which are exited at 320 with
Correct.
some loss.
Yeah.
So total returns are the total P&L divided by the capital employed. That will give you the returns. Average returns, 0.05% of the margin employed for that particular date. So now we come to yearly calendar. So now you can see yearly how it is shown, and it is subdivided into each month. So we know that each month how it has performed. Okay. And then if you click on, let's say, how it performed in September of 2022. Now it will show monthly calendar. Okay. Where we can see daily performance of this strategy. So how it performed each and every day. So here 92% is the return, 92% of the premium. Okay.
Yeah.
So let's say, yeah. So you understood, right? So all this, so each and every day, how this strategy has performed. And then if you see here, each and every trade has been listed. Okay. So like what is the entry time? What is the exit time? What are the strikes used, entered for this strategy? Call option and put option. What is the expiry selected for that strategy? What was the future price at the point of when we entered the strategy? Because the selection of the strike price is based on that future price. What was the entry price of that strategy? So combined short straddles, short call option, put option, you combine premium, that will be your entry price. What is the exit price? Okay. And what is the implied volatility percentile when we entered that strategy? What was the lot size at that point of time? They keep changing, right? Sometimes it was 75, then 50, then 25. So we want to know what was the lot size at that point of time. And the lot quantity depends on how many lots you select. And what was the P&L? And what was the return? Return is based on the premium. Okay. So 7% of this.
Okay.
Okay. And what was the exit reason? So you can have three kinds of reasons here. Exited on exit time, which is at 320, or stop loss of 30% is hit. So once it hits 30%, it exits on the next time. Next 1 minute, not exactly on that. So you will see a little bit here and there, not exactly 30%, but 31%, it could be less also. So that you keep in mind. And if you, for example, if you had a target price, then there will be on, let's say if you choose a target price of 50%, then it will give that target price of 50% hit. Okay. So you will see all those things in this strategy. Now, if you click this, okay, now it will give much more in-depth details of that particular trade. So what has happened to this trade? Now, first of all, here, so at this point of time, the 16,700 or something was the price. So that is why we chose this particular strike prices 2 years ago.
One is
right?
Nifty, one is the strategy price, is it?
Yeah, the other one is a trade returns. So how returns
not Nifty.
are, yeah, not Nifty. So this is Nifty. The futures price is Nifty. The red one is the trade returns. Okay. And then you'll also see what was the time. So each and every time point is shown here, 920, 921, 922, up to 320 if it is didn't exit till that time.
So every single minute it is showing the return.
Yes, future price, premium, what was the PNL, what was the return for the trade. So this is return as a percentage of premium.
Yeah.
Okay, and now there's a position chart also. In the position chart, here you can see individual legs. The red one is the put option and the green one is the call option. So their individual, line chart you will see. And the combined one is the blue chart. That is the strategy price. So how they have behaved with respect to the underlying future price. Okay. So now if you see here, this is more or less flat. By the time you are entering here, a little bit, maybe it went a little bit down. But that is why, your strategy has given some profit in this case. Around 7% return, right? And that's what you will see here in this case. So your return was, yeah. And then now you want to see how this strategy proceeded in time on that particular day. So simply by default, we have a 5-minute time frame. So if you say play, so it will auto simulate every 5 minutes forward till till exit time, let's say. Or you can also manually do it. Let's say you want to go forward by 15 minutes. You can do 15 minutes or 30 minutes. Or you can change the time frame here also. Let's say I want to select 30 minutes and then I want to play. Or you can directly go to final exit time. You simply go to final exit time. It simply go at that point of time. So around 872 rupees your PNL. And it will also show your positional delta at each and every 5 minutes data. Max profit, max loss, break evens, everything. Okay. So now if you go back to the beginning time, so let's say if you go back to the beginning time, and then see, we went, right? So if I play, so it will go every 30 minutes forward. Now you can see PNL changing. It will wait for a few seconds and it moves forward. So it is auto simulating. So
one question which I'm sure will come to viewers' mind: can this be enlarged?
At this point of time, no. But see, in big screen, it is visible clearly. There's no issue. But we might give, if we might see if we can make it full screen if possible.
Yeah.
Okay. See, it is auto playing and it at 3:20. So here you can see the time stamp also. At 3:20, it stopped. This was the PNL. You can check the Greeks at every time point. You can check the PNL at every time point. So you have a lot of information here exactly as what happened to your trade. So it is not just any abstract information, but much more in-depth information. I think this is not available anywhere, as far as I know. So that's so huge amount of data there, which is dissected in multiple ways possible. So in terms of trades, PNL, individual leg, strategy price, future price, everything is there. So so you can check all those information, and you can actually also directly click here. Let's say on the calendar itself, you can click, and it directly shows the data. So you can go. So you can go data in the calendar format also. So you can go to, let's say, what about October, November? So you can go month by month also, like that. Data is presented in much more user-friendly manner in different ways. So user can click and select how the trade has performed and what went wrong or what went right those questions you can ask by going into data, and exactly you'll know. Let's say something went in a loss. For example, it's 39%. You want to know the reason, exactly what happened. Go there. So here everything was fine till here, and then the market went down. So you know exactly what happened. So because market went down, the strategy went into a loss. You can check in position chart. Same thing happens. So here the put went up, and your strategy price went up. The strategy in the case of short straddle price, that's why you lost. So that kind of information will help user to understand the trades and how they went in a in-depth manner. So yes, so all this, so you can imagine all the 500 trades.
One very small disclaimer. This was a strategy which was just shown as a demonstration. Don't go by the, I mean, we are not saying that you should do this strategy or not. It is just to show what Optest is capable of doing. You can select whichever strategy you want and backtest it.
Yes. Yeah, and go through different parameters. Don't just stick to this parameter. These are like default parameters. Now, some other parameters might work better. For example, let's say I want to do this strategy only 5E percentile is 60 and above. Then how this performs? For example, here returns are 22. Now let's see if this improves my returns. So like that, you have to try different parameters. We are not saying that this is the ideal way or this is the wrong way. Even we don't know what is the right way, right parameter. So change parameters.
Market is dynamic, so that will keep changing.
Yeah. Yes, exactly. And also don't curve fit. Curve fit in the sense that, so what some people do is that they keep on changing parameters till they get the best results. So now that is a wrong way to go about backtesting. So when you're going to backtest, choose some parameters that you think are very important for the strategy. So either it is stop loss, target price, or let's say IV, or it could be a trailing stop loss. So we are selecting IV percentile above 60. Okay, same parameters. So let's say if this improves the trades or not. In some cases it might, in some cases it may not. We never know. So as you can see here, that was around 23 or something. Here is around 11, 12%. So it certainly didn't improve, but your win rate has improved slightly. More or less, it's pretty much similar, but the number of trades that it has entered are very few. So, and that might have affected the PNL and total number of returns.
In fact, brokerage has gone down from 58,000 to 16,000.
Yes, exactly, because the number of trades are very few, 136 versus 491. So that's a huge drop in number of trades. So basically check different parameters. Maybe 60 is not good enough. Maybe 70, 80 is much more better for this kind of strategy.
Yeah, so that is what users need to try. Trial and error karna padega.
Yes. So we are not picking and choosing that we only want to show this perfect backtesting. We are only showing what are the default backtesting results.
Yeah.
So that is non-directional. Sorry. Now in the case of directional, now as I said, in directional we have again different strategies. Now these are again time-based strategies. Now I'm not sure if anybody is interested in this time-based directional strategies because it doesn't have any technical indicator behind this. It's solely based on time. So I'm not sure if anybody uses this, but if somebody who might be interested, some people might be interested because markets are mostly bullish. So somebody might want to enter a trade every day like a long call, or long or bull call spread or something like that. Obviously, long call will be at a loss, I believe, but we'll see. Maybe long call spread might be ideal for this. Okay, so let's have the default other things. Stop loss like this, target 0, and then we will not choose any IVP. And capital is based on current system is 20,000. So we'll just double it. Okay. All right, so let's do backtesting. We will see actually if there is any merit in these kind of time-based directional strategies. I'm not sure whether this will work or not, but we want to still provide. Maybe somebody knows something that we don't know, that they might have worked out at some point of time. Because I know of some studies where people have done, they buy Nifty at EOD and sell at the opening.
Yes.
So people have done that also. And that has shown to be profitable. So you never know which strategy will work. Oh, okay. So here this has worked. But not much, but you never know. But as you can see, the expectancy is not good. So in the long run, this might not work. So as you can see, so you can backtest these kind of strategies as well. And remaining everything is pretty much same as I've explained for the non-directional short straddle.
The results tab will be very same for every single strategy in terms of what has been displayed as results.
Yes. And then now let's come to another backtesting system. It's a VWAP technical trading. Now, VWAP technical trading, I know a lot of people use in intraday basis. What they do is that they plot a VWAP chart. For example, they can chart it on long call, they can do it on straddle, they can do it on strangle, any strategy they might choose. And then they will decide to enter that strategy based on the breakout of that strategy price above the VWAP, or when it rallies below the breakdowns below the VWAP. So for example, let's say I want to do a short strategy. So you plot a VWAP on the straddle price chart. Okay, you plot at 15 minutes, 5 minutes, 30 minutes. It depends on people which time frame they want to use. So here we usually choose 15 minutes.
This will be VWAP of the strategy, not VWAP of the underlying.
No, this is VWAP of the strategy, not the underlying. So because I know most people, they do this way. They use using the strategy itself, not the underlying. It is pretty much like straddle triangle charts people use, based on different indicators. So here we are simply using the VWAP indicator. So let's say I want to do short straddle on Nifty 2 years and weekly. This is on intraday level, right? A 15-minute time frame. My exit criteria, is it based on stop loss or it based on the VWAP criteria? Because I'll show you a VWAP chart in a bit. So in the VWAP, the strategy might go up above the VWAP and go below the VWAP. So your entry and exit can be based on that. Okay, or it can be based on stop loss or target price. So that you can select exit criteria. So here, let's say I want to exit on trade criteria, okay, which in this case based on the VWAP thing, right? So first we have to select an entry criteria, then exit criteria. and do not enter trade after 1 o'clock. So,
Okay.
so let's say we plot the VWAP, but it doesn't give a signal till after 1 o'clock. Maybe after 1 o'clock, it might be too late to enter the trade. So don't enter this trade if there is no signal generated till 1 o'clock. So even if a signal generated after 1 o'clock, ignore it. Okay. So your signal has to be generated before 1 o'clock. Then only there is an entry into the trade. Okay. So that choice is there here. And maximum number of trades. Now sometimes what happens, if there is a lot of whipsaws in the straddle or strangle or any strategy, so many times it might go up above or below, above and below the VWAP line chart. Then you might have to enter multiple times. So you can decide how many number of times you can enter the trade. So you can enter as many as possible, or you want to enter only 2. So let's say I want to enter only 2 to control my brokerage. Okay, if it is too much whipsaw, you don't want to keep on continuing the same, right? So let's say I want to do maximum 2 trades in a day, not more than that. So in this case, your number of trades might be more than 500 maybe, because you're entering up to 2 trades sometimes. Now strategy price, the entry trade condition, strategy price crosses below VWAP price. So this is because we are doing short straddle. We are saying when it goes below the VWAP, then only enter. Because we want a price action which is going down for a short straddle. So that is why we have to choose when the strategy price, which in this case is a straddle price, going below VWAP price. And this is 15-minute time frame for the VWAP, plotting the VWAP chart. So now we select the exit criteria, exit on trade criteria. So here, when the strategy price crosses above VWAP, then you exit. Okay. So when it goes below, you enter. When it goes above, you exit. Now, strike selection is based on delta. So very simple. Again, stop loss 30%, let's say, target 0. And the remaining everything is same. Maybe you can change it to 160,000. Okay. And then start backtesting. See, as you can see, there's so many criteria. So select different parameters and see what is the ideal parameter. But don't change same parameter but like so many times. Otherwise, it will be curve fatigue. And in backtesting, it's important to avoid curve fatigue. If something doesn't work, means doesn't work. That's it. Maybe you can change a parameter 4 or 5 times maximum, not more than that. So we will see how this strategy performs. Now you can, as I've shown you, there are multiple strategies that you can test, both directional as well as non-directional. So let's say somebody wants to do momentum strategies. So they can use a long call strategy on VWAP to enter the long call trades. So yeah, so here, so these are the returns intraday, 515 trades it took. But the year, though it is profitable, the win rate is bad. That is one. And profit factor is fine. But for me, it is not positive, means you should ignore the strategy, no matter what. Change
Tell me one thing.
Yeah.
Earlier it was 491 trades. Now it is 515 trades. I didn't understand this.
Yes. Because see, in the case of VWAP, there can be multiple entries in a day.
Okay. Got it.
So that is why
maybe within one day there were 2-3 trades. Yeah, got it.
Yeah, 2 trades. Here we selected 2 trades, but you can keep max trades also. Max trades means it can take unlimited trades as long as those criteria are met. Okay. So maybe this is not better, or maybe let's say you can exit this on stop loss criteria. Okay, then let's see what happens. 30%. Then let's backtest. Though it is a good backtesting result, but your positive expectancy is not positive. Sorry, expectancy is not positive. And it's for any backtesting, if expectancy is not positive, it is, no matter how good the results are, in the long run it might not work. In short term it may work, but in long run it may not work. So that is important, and that is why we give these numbers, so that use those numbers and make a proper judgment before jumping into trades based on these backtest results. So here also not much, but at least as a positive expectancy.
Better than earlier.
Better than earlier. So maybe you can tweak around and see what other better criteria might be for entering the VWAP trade. Maybe you have to change the time frame. Maybe you have to change something else. So maybe you should not enter more than one trade. It could be different criteria. So even I don't know.
That
we are only suggesting.
Yeah, it is completely up to the user's choice.
Yeah. So maybe it doesn't work in intraday. So we don't know. So all right. So that is VWAP and PNF technical trading. So this is a PNF charting method that I was talking to AP some time ago. So to those, should we talk about PNF chart method? At least show.
Yeah, so this is something which is close to my heart. In fact, I have a video on trading strategies based on point and figure charts also. So when you plot a chart of a straddle on a 0.5% box size, there are some techniques which you can use, which I have explained in that old video, where you can take the trade of shorting the straddle and double bottom sell below the triple moving average, double bottom sell below must indicator, those kind of things. Yeah. Or even on Renko, a sell below the moving average or below the MAST must. So all those parameters have been included in this, and you can, if you choose point and figure as a technical trading tool, you can select various parameters on point and figure charts of the straddle to select when the trade should be triggered.
Yes. So just as an example, we choose 24,500 call.
Yeah, 0.5% box size. नीचे box size 0.25%. नहीं, below that.
This one, right?
Below that box size. Make this 0.5.
Okay.
That is 0.25% by default.
Okay.
No, and make it a 1 minute chart. Not 0.5% and a 1 minute chart. Yeah.
And then
you can add a triple moving average or a MAST, must, whichever. I mean, more details can be there when you see my video, so you can get reference from that video. Yeah, so this is now, in fact, now if you see, today morning it has not, when was the day, can you have a day separator? Yeah, intraday lines. Yeah. So in the morning there was a double bottom sell below the moving average. There. Yeah, this one. So that DBS would have been a trigger for this kind of a trade. And exit also can be double top by above the moving average. So maybe now, if the next double bottom sell comes for the current column, that will be another trigger for a trade.
Yeah, here.
Yeah.
So here one can see.
Yeah.
So for example, now let's best do a long call strategy, for example.
Yeah.
So same intraday strategy here. Weeklies we choose, and So here the box size should be 0.5, right?
No, 1%.
Okay, 1%. For
This
options.
is a long call only, right? Naked call.
Yeah. Yeah.
So 1%. Yeah.
Okay.
I mean, minimum 1%. It can go. It can be even 3%, but not lower than 1%.
Okay. So now, so let's say, so here whenever it crosses above triple moving average and double top buy, okay. So in this case, for example, this is the signal. This is triple moving average, and this is a double top buy. This is an indicator in PNF charting method. So for somebody who don't know, this is a signal that I'm indicating, and for somebody who knows, they already know what it means. So whenever this signal comes, we are going to buy that long call. Okay.
Of
Now,
course, this chart is a straddle chart. This is the call chart, is it, or a straddle chart?
Yes.
Okay. Well,
This is a call chart.
okay, fine.
So now for exit trade criteria, we are saying when strategy price crosses below and triple moving average to a double bottom sell. So for example, here the exit will be here.
Right.
So below triple moving average, and it gives a double bottom sell. This red horizontal line there, no? That is called a double bottom sell. This is a pattern in the PNF chart. So now let's see what happens if we select this criteria. We'll make this 40,000. And remaining everything, it's a call option. So it selects at the money call option, stop loss of 30%. Or if stop loss hits, it exits. If it doesn't, if it gets an exit signal based on the other criteria, double bottom sell below triple moving average, it will do that.
Yeah.
So we'll see how this goes. So here, in the case of PNF and Renko charts, the backtesting might be a little bit slow because first it has to plot the PNF charts, the patterns and everything. So it's a little bit slow than a simple line chart. So that you will see in this case. Okay. So this looks like a good strategy.
But expectancy is less. I don't know why.
Yes, because what happens?
I mean, like we also related to the TOI, which cannot be incorporated here because we go long in a call only when TOI is bullish, and whereas this strategy will take every double top buy. So on option charts, not every double top buy is a trade. You have to look at TOI also.
Yes. Basically, that's the issue. So what happens is that, for example, here we got a double top buy, again in went down, again we got a double top buy, but again it exited here. So this is a loss. So you will have multiple of these things, and that might have caused this negative expectancy and low win rate. So sometimes
the returns are good, of course.
Yeah, returns are good because there will be a trade something like this where it gives a outsized returns.
Right.
So so that is the reason you have to also look at the expectancy. So you have to see.
This is an intraday strategy or what have you selected?
This is an intraday. We will say positional, which might be better than intraday for these kind of strategies. So maybe we will show these strategies in intraday so people can appreciate why it is better with those strategies.
Of course, for positional, you will have to increase the box size to 3%.
Yes. Okay. So these are different strategies. And then we have adjust. So Renko and other things I'll show in the other one, positional based strategies.
Yeah.
So now adjustment based strategies. The adjustment based strategies. So I know some people do this rolling short strategy. So what they do is that, so we begin with a short straddle strategy, and then the market moves in this downward direction or upward direction. It might move by 100 points, 200 points, up or down. And it might also that this short straddle might give certain stop loss. It might hit some stop loss, maybe minus 10% or minus 20%. So what people do is that they simply move that straddle to at the money again. Okay. So this is called as a rolling short straddle strategy. Okay, this is very common strategy people use in intraday systems. So here, this strategy, we have 4 strategies here: rolling short straddle, rolling long straddle, and short triangle, as well as long triangle. Again, 2 years weeklies, same criteria. And here we are not entering trade after 1 o'clock, maximum 2 trades per day. So rolling criteria is based on what? When a certain stop loss is hit or when certain target price is hit. Okay. Let's say sometimes what happens is that your short straddle has moved by maybe very small percentage, but you have hit a target, maybe 30% premium you already received from that straddle, but the straddle, the market has moved slightly up or down. So you want to extract more premium. So you roll over your straddle to another at the money straddle. Okay. So that is how this rolling criteria will happen, either based on stop loss or target price hit. So now, so 30 minutes, so we have stop loss criteria and then points. So let's say you are moving, the market has moved by 100 points. Okay. If it moves by 100 points, then you can say that you roll over my straddle from this particular straddle to at the money straddle based on points or based on delta, positional delta. So let's say when you put a straddle, your delta will be 0, positional delta. But when the market moves, your positional delta will change. It could be minus 30 or plus 30. So here you can choose. So if you choose the delta of 30, means if it positional delta is minus 30 or plus 30, then you're rolling over your straddle up or down, okay, to at the money straddle. So that is rolling short straddle strategy. So let's choose based on stop loss target. So here we choose 30 stop loss and 30 target price. Okay. Now 160,000. Now similarly, we can have another adjustment based criteria. Now this is where the feedback of user is important. Like you can suggest what other adjustments would you like to see in this case.
Yeah.
Oh, it could be something else that we are not aware. Maybe this you want it in some other strategy. Could be iron fly, for example, or iron condor. So what will be your criteria that you based on which you want to roll over? Or maybe you want to cover some legs and move those closer, shift those legs. Those can also be criteria. So these are some things that which user can give us feedback, and we will incorporate those adjustments into our backtesting system, which you can then backtest and see.
Yeah, what you can do is you can write to opstra@defineit.com. You can write an email to opstra@defineit.com in case you have any suggestions.
Yes. So here not much used returns here, but the expectancy is good. So yeah. So here we got 527 of those. So maybe this criteria is not good. So you can use some other criteria. And here you can check actually what is the exit reason. So based on exit reason, maybe you can do some kind of adjustments to find what is the optimum criteria that you might have to use to get better results. Okay. So here you can see 30% is hit. So 74 is total number of exits by stop loss. So not much actually in this case.
Yeah.
And number of exits by target hits, only 5. So in general itself, the strategy itself is giving very little returns. Okay. So target price is not an issue. Maybe stop loss can be tweaked, can be made 20%. Let's see what happens if we make the tweak.
Yeah, so I mean, we can go on and on, but these are the kind of changes which you can keep doing to see how it has performed.
Yes, exactly. So this is up to user how they want to use, and obviously we have given different criteria. So go and check which one works the best, and then use that criteria in your system. And even then, I'll always suggest that don't directly go and jump and do the trade. Instead, observe this for some maybe a month or so, and see if that works or not. Okay. And then if it works, then maybe you can deploy it in at scale. Yeah. So for example, this one has better returns, and expectancy also very good. So yeah. So go and check and see what works for you the best.
Yeah, in fact, like I always say, whenever you do backtest for a certain strategy, that is something which has happened in the past. But how is it going to behave in live market? Whether you can really get an entry based on the criteria trigger or whatever, that is something which you have to observe for a few weeks. Something which is called as live testing also. So it's not that backtesting ka result acha hai, chalo I'll start it from tomorrow. You need to observe it in the live market for a few weeks at least.
Yes, exactly. So yeah, so pour over through all these results, and you will understand all the things.
Yeah.
And obviously, for those people who don't know, you can access this if you are an existing Opstra Pro premium user, Pro user. You can directly access this without any issue, and there will also be a trial. You will know more details when we launch this in few days. Okay. So this is covers the intraday backtesting so far. Okay, now let's have a look at positional backtesting. There are certain differences compared to intraday backtesting, which I will show. So there are several several backtesting methods, and one of them is event-based backtesting. Sorry. So event-based means we have different events, right? We have earning results events, like when company announces its quarterly results. That is one. The other one is RBI events. We have bi-monthly monetary policy decisions. And then we have general elections, which of course every 5 years. And then state elections, different elections have different impact. So you can check, what was the effect of these events on the market or on the stocks. Okay. So that is one. So let's check.
Just one question, Raghunath.
Yeah. Yes.
General elections is fine. There is only one date every 5 years. Yeah. But what have we considered for state elections?
So state elections, basically all the state elections. So whenever the counting day, the morning of 9:30 or so, we consider as the results announcement.
Okay.
The day they count, not the exit polls, but the results itself.
So the 9:30 a.m. on the counting day.
Yeah, something like that. Yes. So because by that time there is certain kind of trend which decides that who is coming to the government. So there is clarity by that time.
Right.
Because the counting starts from 7 o'clock in the morning. So I will also show how those results look. So coming to event-based results. So in earning results, earlier we used to have two different in that. One is pre-earnings results and post-earning results. So in the pre-earning results, we used to, our hypothesis is that the IV increases, that there is a demand for the options as we go into the results, because people try to speculate that, okay, some big result might come, so let's buy these options, and that increases the demand for options and the premiums increase. So we are betting that, if we buy these options certain days before, that by the time we go to close to the result, that we might benefit from the increase in premium. That is the pre-earnings results. Now, so let's check what happens in pre-earnings results. Now, so let's say we take long call. There are many stocks we can maybe check. So let's say Axis Bank. We do the long call, for example. So in last 2 years, we enter the trade 8 days before result trade. So this is -8. So 8 days before result trade. And then we exit the trade 1 day after. So this says 1 day after result date, but it should be 1 day before result trade. Because if you are entering the after result trade, we might have problem, because the result date will have huge impact. Yeah, huge impact on the IVs. So we have to exit before that. So just to extract the premium and then we exit. So now let's say, so these are the criteria, and we select at the many call option. So we buy a call option 8 days before, and we sell 1 day before the results are announced. So entry is, again, we can choose in the morning, and the exit will be in the before the market closes on the 1 day before result date.
Yeah.
So we have that fine time point selection in terms of selecting the option. So we can keep the stop loss and no target criteria, stop loss of 30%, and margin is, we can change it to 40,000, just double of usual margin required. And then we check how it worked for example, Axis Bank. So here the win rate, so it didn't work out well for the Axis Bank. Every time it has its stop loss. So maybe better do some other strategy in this particular.
Just to interrupt, I mean, we'll show it also. A long call has not worked doesn't mean a long put would have worked. Maybe you can show that also.
Yes, exactly. So may or may not work. We are not sure.
Yeah, so it's not necessary that it will work.
Yes. So in this case, it has worked.
Oh, it has worked.
So, it is possible. It is possible that the Axis Bank might be in some kind of consolidation, or it might be going down. So that also might play a factor in this. Okay.
But still, expectancy is not good.
Yeah, expectancy is not good. It's negative.
Yeah.
Now let's say long call, we can check, the different stocks which have different results. So let's take Bajaj Auto, for example. Maybe, so this is also not good.
Actually, I'll tell you something. Till 2 years back, this was working very well on Reliance, but it has not worked well, I think, over the last 1 year.
Okay. So here, for example, here it's looking good. For example, it is like 50-50. Yeah, it is 50-50, but when it worked, it gave very good returns. So yeah, expectancy is positive. Of course, these are very small number of sample. So this max drawdown doesn't make sense in case of those in these kinds of trades. There's very few trades. Yeah, so it depends on stock to stock how it behaves. So you have to go through all the stocks and see which one has certain characteristic before the results. So let's check what happens with Reliance. So you are saying Reliance. Reliance. Yeah, it's didn't work. Yeah, it depends again. So that is one. The another criteria is, and also you have to choose different strategies also. Maybe something work with long call, something work with some other strategy, long bull call spread. So try out all these things and see which one suits better with which stock. Because each one will have different pattern to their earnings results.
Yeah, every stock is different. Yeah.
Yes, every stock is different. Now another one is event based earnings results, but in the case of this is a post earnings results.
Okay.
So what happens here is that we are saying that the IVs are very high after the results, just after results are announced or just before results are announced, the IVs are very high. So can we exploit that? That after the results are announced, that the IV is going to go down and maybe something might be there. So post thing, we have to do short volatility strategy in this case. So let's choose short straddle. And I think Reliance is fine. So we are entering this on result date, let's say, or 1 day after result date. And we exit 10 days after result date. Or whatever, stop loss, if stop loss is hit, that is done, or it will stay like this. Okay. So let's check. Everything else is same. This is 1.6 lakh is the margin required now, right now. So let's make 200,000. Yeah. So these are post earnings results. Yeah. So this is good, but in terms of returns, because we are using 200,000, higher capital, it is showing 7%. But I think it is still fine. Positive expectancy, your win rate, and you are holding this. I'm not sure. We can check it here. Yeah. So around 10 days we are holding this. So that is fine. That is post earning results. And we can also check this with on result date. This might have some difference. So on result days,
you get higher IVs.
So here, for example, we can do one thing. We can enter just after 30 minutes. I'm not sure. Is there, do the Reliance announce during market hours?
No, typically after market. Reliance is mostly after market.
So after market hour means it doesn't make sense.
Then it will be 9:45. Is it?
No, usually if it is after market hours, then it will shift to next day.
Yeah, but then if I say 30 minutes after market result is out, so that day is gone. So will it take 30 minutes after open next day?
Yes, exactly. So it's the same. Basically, this will be same as that. So we need some ticker which shows results during market hours.
Maruti is typically afternoon. Maruti.
Afternoon. Okay.
Yeah.
So maybe we can check this. So let's check this. Yeah. Okay, 50-50 kind of thing. Yeah. So basically, you can check different ways on how you can enter this particular strategy. You can enter 1 day before on result date or 1 day after, and then see which one gives good results. Now this is event based, and then another one is RBI events. Now this will be applicable for Bank Nifty because those are the stocks which are maximum affected by a decision by RBI thing. So here again, this is a pretty similar to earnings. These earnings results, the IVs go up going into the results. So we are going to sell a short straddle or short volatility strategy just before results are announced, and then we'll see what happens. So we do it on result date, okay, and then we'll see what happens. So we got 10 trades, 60% win rate, positive expectancy, and these are the returns. So it is entering at 9:20, and so result date is at 10 o'clock. Yeah. So 10 o'clock is around where we get the. So we are
RBI
entering just before. Yeah, just before we are entering. So these are the results. If you look at trade wise, you'll get these results. You got 2 stop losses hit. So maybe we can have a stricter criteria for stop loss, for example, 20%, and see what happens. So it is, see, so just changing that criteria has changed everything. So you have to also give some room for the trade to work out. So yes, so change the criteria and see what works out. That is one. And then we have non-directional backtesting methods. So here, this is a positional, and here we can choose how many days before. This is also very similar to time-based straddles, but only here we are selecting how many days before we want to enter the strategy. Okay, 5 days before expiry, 10 days before expiry, like that. So here, let's say I want to enter maybe 10 days before expiry and exit on the expiry day. Okay, here you can choose on the expiry day. And last 2 years short straddle. What happens to the this thing? So let's keep 30% stop loss and everything. You already know. So 160,000. And for monthlies, you can go up to 45,000. 45 days before expiry, and then you can check which one works out better. And actually, I know in the case of monthlies, there is one particular strategy which works good, which is enter before 13 days and exit 6 days before.
I think expiry. It is 13 days to expiry, right? 13.
Yes, 13 days and 6 days.
In fact, there is another strategy which I have backtested sometime back. It works well. It is entering a monthly iron condor 45 days to expiry, which is next month.
Oh, okay. We can check. As I said, that's a good thing here. Okay.
I mean, so many, almost like countless possibilities. Anyone can think of what you can do. And
yeah, one thing I want to point out here. So if you look at if you compare this to intraday backtesting results, okay. So there also we had good returns. From what I remember, 23% was the returns for the same set of. So here we are doing positional, but here we are holding the position for almost 10 days per weekly.
Yeah.
There we are holding for 1 day only. Okay. And there the brokerage is very high. The number of trades are very high. But returns wise, if you look, these positional returns are much better than compared to intraday returns. But intraday returns will work out if you are doing for large quantity. That will be the advantage in there. Otherwise, go with the positional short straddles. So just simple strategy, we can do this. And then again, you can tweak around different things. So the number of stop loss, actually all the loss trades are actually stop loss trades, pretty much 59 and 61. So you can check what is happening there and tweak accordingly. But overall, it looks good. Only the expectancy is close to 0. It's not positive, but fine. Okay, that is a short straddle. Let's check with monthly, the one which I was talking about. So you can do 13 and then 6. So this has even better returns. So and expectancy is also very good. 2.4 max profit in a day 10. Drawdown is very little. So yeah, this is
my only question is for a positional strategy, 1.6 lakhs might be less. For intraday, it is fine, isn't it?
Yeah. So yeah, I mean maybe we can also tweak around because all the exits are based on this stop loss only. Maybe you have to give some more room, like 50% instead of less. Because what happens is that in the market, there is a sudden movement and sudden IV rises, and then it cools down again. So that changes, a little bit. Yeah, it improved slightly, but not much. So more or less same. Not improved actually. It's a little bit less returns. The other one was better. So yeah. So you can change those criteria and try. And then same way, directional, nothing much. It's pretty much to intraday that I've shown. For example, we can check that strategy, that one long call, or maybe short put we can do. So what you do is, no, here we cannot. No, that is not possible here. No, the one which, exit, enter today and exit tomorrow. Positional. Yeah, that is not possible in this. Because this is based on expiry. It's not every day. So that might be in intraday, I believe. Anyways, we'll see. So yeah, so I can do directional, very similar to non-directional also. And technical trading is something very unique to positional trading. Here we are using technical indicators from candlestick charts and line charts mainly. So here we have long call, for example. Again, these criteria is all same. The only thing is, once you enter a trade, how long you want to hold that particular trade.
Yeah.
Okay. So here we are including all trade days, earning trades. Means sometimes some people want to exclude trades which involves earnings. Okay. So here we are choosing all trades and a 15-minute time frame for the technical parameter. So we are choosing the stock price. So in this case will be a spot price. And then, so now these are the indicators. You can choose moving averages, T3 alternate channel, or you can use here on the technical parameter one, you can choose moving averages and then RSI, MACD, and all those things. Okay, and the number of down days, for example. So we can choose all these different indicators. Let's say stock price crosses above 10 EMA. Then you want to buy long call. Okay. And when you want to buy is 920. And the exit will be based on stop loss. So let's say 30%. So we're exiting
So
after
the
10 days.
chart, the chart time frame here is 15 minutes, is it?
Yes. So on 15-minute EMA, 10 EMA. So 10 moving average and 15-minute data. And then whenever it crosses, we buy a long call and then exit after 10 days if nothing happens, or stop loss of 30% is it. Either one of them happens first. And again here, you can suggest us any indicators that you might want to use. So we have included many indicators that users have suggested. We can include more if you want to test those.
Of course, if you make it more complicated, even over here, it will take that much more time for the backtest. So you have to bear with it.
So it considered a capital of 20,000. Okay. So we have 150 trades. So this looks good, but expectancy is less. I think this is a characteristic of trend following strategies.
Yeah.
I'm not sure if in general it's a negative expectancy, or I don't know, I have to check. But yeah, because see, there are a lot of maximum consecutive losses. Because there might be, it went to 10 moving average and suddenly it fell down. So it's stop loss.
In fact, if you see out of 150 trades, only 32 trades are in profit.
Yes. It's a pure trend following strategy. Basically.
And when a trade is in profit, it will give a good return.
Yes, exactly. That's exactly what happened. See, returns are good. Returns are good, but expectancy is not good because of that issue that is explained. And I think all the trend following strategies have this characteristic. Your win rate will be less. So you have to tweak around, stop loss or target price to see, to reduce, to increase your win rate and increase your, make your expectancy better. That's all I can say in this, or add some other exit criteria to improve entry and exit better. Okay, that is technical trading. I remember one more strategy. So when Mama crosses above Pharma, you buy a long call and 30% stop loss. This is also some kind of momentum strategy.
Yeah. There are different types of moving averages.
Yes. Yeah, the behavior is very similar again. So all the momentum strategies has momentum or trend following strategies have this issue of low win rate, but when it wins, it wins big. See, max profit in a trade 44,000. Max loss is only 5,000. So that is technical trading. And we'll be recording more videos if you find some interesting backtesting results. So keep following us. And if we find some very good backtesting results, we are going to share with all you people. This is just only to present the features so that you can understand and get started on how to backtest.
Yeah.
Now coming to P&F backtesting. So here, AP, we have the choice of generating signal on options or futures.
Yeah.
So we can generate, we want to do a short straddle on this, like the one which you do.
Yeah.
So short straddle.
So short straddle, double bottom sell below triple moving average.
Okay. And you want to do an options?
Yeah. On the straddle price. I mean on the straddle chart.
So options basically.
Yeah. Yes.
So all right. So brick size, box size will be
0.5.
0.5. Okay. So so exit. Okay. So now strategy process crosses about TMA and double top. Sorry, it should be below.
Below,
DBS, okay.
yeah, EMA and DBS, yes.
Yes. And then the exit criteria, you want to use stop loss or you want to use this one, DTB?
Yeah, I think this should be okay.
Okay. So in that case, I'll not use any stop loss. Let's see.
Yeah.
So we are entering this trade 10 days before weekly expiry. So
Oh,
whenever
this you're doing on weekly, is it?
yes, we're doing it on weekly. You want to
Normally, I talk
do
about
on monthly?
only doing it on monthly options, but let's see the results.
Let's see. Yes, yes. So as I said earlier, PNF and Renko charts, they take
It'll take time.
So yeah, so these are the returns. Looks good.
This is over 2 years, is it?
Yes, over 2 years. Expectancy is good, profit factor is good, and returns are good.
Yeah.
And drawdown, super. Just 0.5, minus 5%. So yeah. So 1, 2, 3, 4, 5 loss months in 24 months.
5 negative months.
5 negative months in 24. Yeah, overall looks good.
Yeah.
So let's check in monthly. So monthly, how many days before you want to enter?
No, there is no reason of days. It can be any time. I mean, this criteria need not be there at all. You can say 30 days before it.
Because it will keep on doing that expiry only till till the
No, you can
signals are
say full expiry. So 30 days, maybe 25 days before expiry.
okay. So your entry criteria is this. So same criteria. So the number of trades are very less.
Yeah.
And these are very less. Again, expectancy is very good.
1.5. That's very big.
Yeah, very big. So your drawdown is very less.
Yeah.
So this has to be combined. See, this is a standalone strategy. You have to combine this with something else, which I'm going to show you later. So yeah, this looks good. Obviously, weeklies, because the number of trades are very high, and maybe in weeklies the premiums or the relative premiums are higher to number of days. So you will see maybe much more better returns in weeklies. I mean, that's my interpretation. See, none of them we made stop loss 0 anyways. Yeah. So let's see how many negative months. So there are more negative months here.
More negative ones.
Okay. So now that is that. And Renko trading, technical trading. Here.
Yeah, maybe for Renko you can use must indicator 2% brick size.
Okay.
For a straddle.
So
or for a naked call, you can say 3% brick size. And must.
Okay. And must. Okay, let me do must with long call. Chart. Okay.
You can take Nifty 24,300 monthly. Yeah, 29 hours call. Yeah.
Okay. So this is how it looks. So must indicator is a Renko based.
Make it a 1 minute chart and 3% box size.
Okay.
Sorry, 2% brick size. 3% is also fine.
It's 2%.
No, 3%. Sorry.
Yeah.
Yeah.
So here you can see. So the way we enter a strategy. So let's say if we long call, so it has to go above this red zone. Okay. So we enter here, and stop loss will be this, right? I think, yeah.
Yeah.
So when it goes below this or 30% stop loss, which might be, and then like this. And for on the downside, if you set, let's say, long put or sell call, let's say, if below this, and then you do, and stop loss will be here or here. I think depends on the user choice in this case.
Yeah.
So I'm going to do long call then. Long call, weeklies, monthlies.
Yeah, weekly is fine.
Okay, options entry day 10 days before. Brick size 3, exit on stop loss or target. Okay, first strategy prices crossover bullish must cloud. And exit should be stop loss or this one?
Stop loss, stop loss.
Stop loss, okay. Stop loss, let's say 30.
No, it will be a bearish must cloud.
So that's what, okay.
Yeah.
So exit on trade criteria.
Stop loss is a bearish must cloud. That is what I meant.
Okay. So I'll make stop loss 0, yeah. So here, this is bullish must cloud, the what you're seeing green, and the red one is called as a bearish must cloud.
Right.
So this is the indicator that is developed by us on Renko chart. Okay. So let's check. Again, this is kind of trend trading strategy, I believe.
Yeah.
So you might see some negative expectancy and low win rate.
Of course, in this, I also would like to stress that, like I said before, this is also related to the TOI. And
Yes.
even the historical TOI is something which is available on Optest. So let's say you want to see a trade which happened in 2022 May. So you can go to May 2022 and plot the TOI of that date. Especially for the loss-making trade which will come in this backtest, those can be tested with the TOI.
TOI manually check if that can be eliminated.
Yeah. I mean, the logical thing is including TOI in this result, but that is not possible. I know that.
Yeah. Yes. So yeah, as I said, the negative expectancy and low win rate, and this is expected. It's not something out of the blue. As I said, AP, that we can add another indicator on top, which is TOI, which is available in Optest, total open interest indicator. So if you include this signal along with TOI, then you can reduce the number of loss-making trades. Correct. And thus improving the expectancy and the win rate. And obviously, here the returns are good, but you can improve it much better using that.
Right.
So that is for Renko with options. And similarly, you can also do it on futures. So for example, you want to enter. So exit and trade credit future price crosses above bullish must cloud. Exit trade credit bearish must cloud, and just you do long call. So this, instead of doing here, we are doing in Nifty futures.
Yeah. Nifty will be 0.05% brick size.
Yeah. So here we go and change it to
0.05.
Yeah, 0.05. So it will look like this. So it gave a signal here. Right. And it's the signal. So like that, you will see in this.
So it will buy the at the money call, right? When
call
Nifty
option, yes. At the money call option, yes.
Yeah.
Basically, we have codified what AP is teaching, how to do these kind of strategies, obviously along with combining with TOI. But this is standalone how we are going to trade Renko charts or PNF charts. But technically, how we can use the data and trade them. So this is basically backtest of that.
Yeah, and every strategy can be made better than the backtest by using judicious position sizing and money management. I mean, you need to understand the strategy in totality, how it gives a drawdown, why it gives a drawdown, what you can do to prevent a bigger drawdown. That comes with position sizing.
Yes. Sometimes, even the box size can influence the number of whipsaws
Yeah,
you can see, and time frame, so many things. And similarly, we are going to add more and more indicators from both PNF and Renko. And some users have reported they found some good results using PNF with some intraday short straddles. So we can check those out. And maybe AP, you can also try some of those backtesting of this Renko as well as PNF.
yeah,
Maybe on one day we can do another session to discuss those results.
yeah, sure. It's taking a lot of time.
Yeah, Renko. Because first we have to do it on futures, and then we have to go to options, and again we have to
Yeah,
do on options. So there are, like, multiple layers that we have to cover. And the construction of these charts are not simple, so they take time. So now we are coming back to the final one, which is the custom backtesting. Now we have both intraday as well as positional custom. So here in the custom backtesting, as I said, that you have the ability to select each and every leg and set the criteria for each and every leg. So here, for example, let's go back to the short straddle again. So we take a short straddle. Here, how we will do? We select call option. Okay, we are selecting the position, the strike price based on delta. So 50 delta at the money, one quantity, call option, and we are selling it. So we have a stop loss or target price for that particular thing. So we choose 30, target maybe 0. We add a leg. Okay, this is one leg. And now we select put option. Again, same criteria. We add another leg. So select
okay,
put
so
option.
both legs are treated separately in terms of trading.
Yeah, stop loss. Yes.
Yeah.
Both trailing. So if this is normal stop loss, we can have also trailing stop loss.
Yeah.
So both in terms of stop loss and target price, we can have individual one. So let's say we have a straddle. Market is going in one direction, so we exit. It's going up, so we exit the call option and keep the put option.
Right.
So we benefit from the put option like that. That's the idea. So, and we can also do a combined strategy also. At combined level also we can exit. So let's check that as well. Maybe 0 I'll make for now. So you can add up to 10 legs in this. If you have very complex strategy, you can do iron fly, iron condor, or any other strategy that you might want up to 10 legs. So it doesn't make sense to go more than 10 legs because there's no such strategy that makes sense with that many legs. So here again, it's I would say these are decent results. Expectancy is good. Profit factor is good. Win rate is good. And total returns are good. And this is a PNL. And this is intraday. Every day it is doing. Okay. So these are, I would say, it's much better than the simple intraday that we were doing, where the stop loss is at the combined strategy level. So these are individual level. And here I want to indicate one thing. See, all are the, so this we did for only 6 months. So I had to go 2 years actually. Let's check 2 years. Sorry. So yeah, so so as I said, up to 10 legs, multiple combinations that you can do. And again here, if you have any suggestions that can improve this custom backtesting, please give the suggestions at optest@definance.com, and we will add those things. And if there are any other additional parameters that we can add to this each and individual leg, and again, as in future, we will do more backtesting, and we find something interesting, we will share with you from time to time. And something one has to remember that if you are doing an intraday backtesting, it's more likely that you should have some kind of algo system, because
because
it's
execution is
very
important.
difficult. Yes, execution is important, and it's very difficult for people to follow these things, all the time.
Yeah.
Yeah. So here returns are good for 2 years. So these are the returns. And expectancy good, win rate good, drawdown is decent. Yeah. The curve is very smooth. So yeah. So one can follow this. Check again. Do live testing and everything. And let's look at the month level. There are 4 months which are bad. 1 month is huge, 2023 February. Was there some event in 2023 February?
Maybe budget.
Yes, exactly. But budget, yeah. Yeah, exactly. Budget.
The budget is normally on 1st February, no?
Yes. Let's check which day it is. There might be one huge trade. 2187, 3197, 5000.
February 2023, yeah.
Yeah. Could be, but not much, maybe 2 trades.
Yeah.
But there might be some spikes depending on budget related expectations, based on news, things can happen. So that is why this is important to look at the monthly calendar, because you will know like what has happened on that particular month or date. So we can kind of exclude those things from results and see what happens. So another thing that I forgot to tell, that in the case of custom strategy, we have given the data both at combined level as well as individual leg level.
Okay.
So what has happened at individual leg level, and its combined level. So for example, in this particular one, the call option was profitable and it exited at 320. But the put option, it has hit the stop loss at 30%, because we put an individual stop loss for this.
Right.
So it exited at 947 itself. So the market has moved. So that is good, because you have exited, instead of exiting the whole straddle, you are keeping your short put option and benefiting from that, and kind of mitigating the losses if you have kept the combined stop loss.
Yeah.
So that's advantage of doing this custom backtesting with this. And again, you can do same simulation and everything. And this is combined level, obviously. And then in option simulator, it starts as a straddle, and once it exits the call option, it becomes a short put option.
Liquid, yeah.
Then, but yes, at final exit time, you have a profit of 320. That is this one.
Yeah.
Yeah, this is, you can see the profit 320, combined profit. So that is the one difference that you will see from the other kind of backtesting. Okay. And here you can also see all legs are squared off as stop loss or target is hit. So 90%, 30%, 30%, both stop loss are hit. So that is good. So all that information is there for you to check in the custom backtesting. So similarly,
this gives such a huge number of possibilities for anyone who is, definitely not for newcomers. This is for people who have been in the market. They can think of any kind of possibilities to backtest.
Yes. And also similarly, you can do custom for the backtesting in the positionals also.
Yeah.
And it's pretty similar to other positional that I've explained before. And here, you can also edit. For example, you did a backtest you want to go back and change the delta, or you can change the stop loss at individual level, or you can want to change to trailing stop loss. So you can do all those and do this and again start backtesting. So as you can see, so we have shown intraday, positional, custom, and we have shown different backtesting methods, event based, and then we have technical, candlestick based technical, PNF chart based, and Renko chart based technical. And we have custom ones where you have much more control in terms of backtesting. And please let us know your suggestions, and you can send that to email opstra@definex.com, opstra@definex.com. Okay.
Yeah, and this is available on opstra.definex.com as well as opstra.definexsecurities.com. And like I said, there are hundreds and thousands of possibilities. So do spend time on your favorite strategies as well as looking at new strategies. And we are sure you'll come up with something. And like Raghunath also said, if you have any suggestions for additions or modifications, we are definitely open to that. And those suggestions are most welcome.
Yes, one more thing is that you can find this both Optest on optest.definex.com. Another one is optest.definexsecurities.com. Yeah. So both, it's pretty much same.
Yeah, and for Opstra subscribers, this is going to be free of cost. And for those who don't have an Opstra subscription, either in Definex Solutions or Definex Securities, it's going to be a very, very nominal price, and we will announce that soon.
So this is on Definex Securities, and this is on Definex.com. So if you have a pro account,
exactly identical.
Yeah, exactly identical. If you have a Opstra Pro account, you can directly access them without any login issues.
Yeah.
Okay.
Okay, so thank you very much. And this was a very detailed video, and there are so many features that it has to take so much time. So we hope there are people who will spend 10x the time and backtest their favorite strategies and definitely give us more suggestions to improve it more. Thank you and bye-bye.
Okay, thank you.